Hello traders everywhere, Adam Hewison here coming to you from the digital studios of MarketClub. Well, it's the 11th of July and we had quite a market last week with the Dow and the S&P moving to their best levels since last May. It's difficult to say what's going to happen, but generally speaking, our trade triangles, if we can put these in on the S&P 500, are all positive. You can see plus 100, so we never became negative on this. We just moved to the sidelines. Now we're back on the long side of the market. But here's the dilemma or the conundrum that we're facing right now, and every trader is facing. So here's what we're seeing. We're seeing this sort of large box that's been in this market for some time. We've traded really back and forth since the beginning of 2015 to where we are now in a very broad spectrum of swings. And you can see we've been up here and we sort of just dallied and boom, down, up here again, down, up here again, and it goes slightly further. But is it going to have another big down? That's a big question, and nobody can answer that right now. If the money stays very cheap, which it is right now, maybe stocks will go higher, but there's just not a gut feeling that's going to happen. But sometimes when there's no feeling at all, that's when it happens. So trust the trade triangles, go with the trend, and that's the best way to trade right now. So let's move on to our next market. This is the S&P 500 we just looked at. So let's go to our next market. Very similar picture in the Dow. You can see here's the box, still in that really a broad trading range in my mind. If we clear this and a few days, maybe a couple of weeks over this level, then I can see it move going higher, possibly to maybe the 20,000 mark. But for now, there's a little question mark in all of these markets, and I think that's the thing to look at and be a little bit concerned about. But having said that, the trend is your friend, and all of our trade triangles, you can see quite clearly, are all very, very positive on this market. In fact, our monthly never did change. Only the weekly changed, because if you remember, we were neutral on this market, and it saved us a lot of money. And now that we're long, let's see if we can make some money on the upside. But generally speaking, the trend is your friend, and the trend right now in the Dow and the S&P 500 is on the upside. A little bit of a different picture on the NASDAQ. If we just sort of scope this along, you can see the NASDAQ isn't close to its highs. In fact, it's more of a trading range. We did get a negative signal on the NASDAQ. We've always said that's the weakest index right now. So we have a minus 70, which is not an outright sell. It's really a neutral, because the weekly is on the positive side, indicating you should be on the sidelines in this market right now. But again, if we were to get short any market, if we would get a signal to go short, mainly the weekly going red, then this would be the market we want to sell. Okay, here we are, gold. You can see that we set the lows in December, and since that time we've been steadily going higher. The big news to me, of course, is breaking over the $1,300 level right here. This was the resistance. You can see it touched here back in early January of 2015, and then it touched it again here, and there's enough to push it back. But once over that level, this 1,300 level should act as now support. I think we probably may see a pullback here. It's beginning to look a little tired on the momentum on the RSI. However, I think longer term, we're going to see this market go much, much higher. If we just measure, let's say we'll call this, let's just be very conservative, 1,100. It's actually probably closer to about 1075, but let's say 1,100 to 1,300, take those two away from here to here, and that gives us 200 to add to this number, and that takes us up to 1,500. I think we're looking at $1,500 to maybe $1,600 on the upside this year in gold. So watch that very carefully. This is the inflation we talked about. It's coming into the market, and that may be the savior that's going to help save the Federal Reserve Board. So we'll see. Here we're at crude oil, and this is how we're looking at crude oil. Our trade triangles, if you put those in, you can see they're clearly on the downside. They have been for quite some time. Last signal we have is right here at 47.90. We're 45.14. That's almost, well, not almost, it's about a $1,800 profit in this position right now per contract. Clearly below the 50 line in the RSI. But what I'm looking at more so now is the Fibonacci tool here to here on the lows. You can see we're getting very close to these levels, 45.23, 43.61. I would expect we'll see some support coming into the market, particularly as we're seeing the RSI begin to flatten out on the indicator, particularly as we're seeing the RSI flatten out. But having said that, we want to see the market turn around. The first one to turn around will be the daily, which means to cover the position from 47.90 and be on the sideline. So watch that very carefully, but I think we're getting very close to an area that we may be finding support in this market. You can see the last time we pulled back was right here, was about a 50% pullback, and again here about a 50, 68, 1.8% pullback. Watch those pullbacks very carefully on the Fibonacci. This is going to be a very interesting week. Stay tuned and be sure to leave a comment on our blog. If you have a question, please leave a question. We'll be happy to answer it for you. So have a great trading day, everyone, and thanks for taking the time to watch this video.